Greetings, Dr. Jeffrey Scott. This is my Market MRI Pro update for April 14th, 2025. Don't forget, taxes tomorrow. Markets Rise into Resistance is the title. If you are new to my channel, hit the subscribe, hit the alarm, and you'll get notified when I do this again. If you like this, thumbs up. It'd be great. If you have remarks, either email me at marketmripro@gmail.com or at hdsidoc@gmail.com, and I'll answer everything. And constructive comments, positive and even negative, are welcome. This is for educational purposes only. Anything I talk about is in the spirit of education, should not be considered investment advice. I do these videos to demonstrate the tools of top-down analysis and how I apply them. Trading involves risk. You are solely responsible for any investment decisions you make. I may own or intend to buy or sell any stock mentioned in this report. Trading stocks and options should be considered risky. Always consult with your financial advisors. And I have tools in multiple platforms and am an independent trader. If you like my videos, we are slowly but surely filling up in Tustin, Orange County. June 6th through 8th, $300 until the end of April. Then it will go to $400. Reach out to Greg Mills at gam72054@aol.com. Right now, I've got John Person speaking, Chris White from EdgeRater. I got a tentative approval from CarusoInsights.com, Matt Caruso, so hopefully he'll be there as well. And I think you'll get just an outstanding educational experience, especially 3 days for $300. How can you lose? And then the other piece about not losing is, why don't you join my Google group? My Google group can be, I went the wrong way. It's called Top Down Trader. You'll get earlier notification of videos. Not every video I do makes it to the internet. Well, makes it to YouTube, I should say. Everybody goes to the internet. It's free. I'll actually give you discounts on my tools if you belong to the Google group. Love to have you. Again, it's called Top Down Trader. Please go ahead and join. And lastly, know your news and earnings. So on Tuesday, we'll have import price, price index minus fuel, Empire State Manufacturing. March, April, a lot of this is before the tariffs. It's all before the tariffs. Not sure that anything's going to move the markets unless it's really outlandishly high or low. If you look at earnings, that's probably a bigger story. We'll have Bank of America and Citi and J&J in the morning, United, Interactive Brokers, and more in the afternoon. And then we really start to pick up as we go through the week. And remember, Good Friday will be there'll be no earnings. I believe the market is closed, 4-day week. It's a judgment call to hold stocks over earnings dates. It's bad judgment to not know when your stock's earnings date is scheduled. And just to clarify, the U.S. stock market is closed on Good Friday, but the bond market is open for an abbreviated session. It's a judgment call, as I said, to hold stocks over earnings dates. It's bad judgment to not know when your earnings date is. Once again, the Top Down Trader Group, please consider joining on the Google group. And now on to the charts. All right, I'm going to go fast. This will be more of a market report than a teaching session. So this is TradeStation, and some of these are my indicators, but I really like, these are Sagar Nandi's Q Edge tools mixed with a few of my things. And what I really want to show you, whether you look at the spider or the Qs, they've run right up into a resistance zone. If you look at the diamonds, they're getting close. And the Russell, which is beaten up so far, has a little bit further to go. But you'll notice even they ran into these lines here, these blue lines. So this is why I call this rising into resistance. Now, we can stutter step and go sideways at resistance. We can have a strong open and barrel right through, and if we're lucky, resistance turns to support. Or we could just fail. And really, those are the three scenarios that I talked about over the weekend. If I look at the futures themselves, really don't say too much different. I really think it's about, and you can see there's nominal moves right now when I'm doing this at 10 o'clock on Monday Eve. What happened in the markets on Monday? Up here you could see if we rank by 1-day close, The leader was a Russell, which lagged the last couple of sessions, up 1.25. Spider just under 1%, Diamonds 0.87, Q's 0.68, and the VIX came down another 11%. If you look at where we closed, except for the Russell, we closed kind of in the middle of the range, and then the VIX closed at the bottom, which is good if you're bullish. Now on the new high, new lows on the NYSE and the NASDAQ, the numbers have come down considerably, and we're starting to show positive numbers on the short duration. So that's a positive sign. If we look at one-day change on the S&P 500 sectors, we were led by real estate, utilities, and staples. That's interesting. A positive day in the market led by defense. Come to think of it, it was a lot stronger early on. So maybe that's because, excuse me, the market weakened as the day went on. Down at the bottom are discretionary communication and tech. I'm sorry, I got a head cold that's driving me nuts, and that must have sounded horrible. Apologize. So the more growth related risk on underperformed, even though everything was up on the session. Over here, actually down here, if we just look at what were the themes that were working, solar, biotech making a comeback, genomics and biotech, China, copper, silver, China, clean tech were the leaders. Here on the S&P 1500, the NASDAQ and NYSE, you can notice on the top that all the sectors were up in the S&P 500 for 2 sessions in a row. 94% of the NASDAQ sectors and 100% of the NYSE. That's a strong session. 87% of the industry groups, 79 and 86 were up, and stocks 79% of the S&P 1500, 68% of the NASDAQ, and 75% of the NYSE. So strong day in the markets. Only thing that's depressing or negative is that it was a lot stronger at the open. If we go and we look at the U.S. indexes, you could see, let's go on the daily, perfect, that one could come in here and draw, don't do that, forgot I could enlarge this, let's see, I'm not sure it's going to let me draw it in this, I have to draw it on the other layout. Well, one could look here and you have really the same thing on the 3 big ones. And that is that they fell hard, they had a recovery, but you could see a solid bar that's white. That means it was up, but it closed lower than where it opened. So big gap opens, closed lower than the open, still positive on the session, running right into the 17-day moving average, interestingly, and they all failed at the same place. The Russell down here did not get as far. The VIX was down, and the dollar is kind of languishing as it's weakened with the tariff time. So that's the daily, just out of curiosity. On the weeklies, you could see the 50 weekly here, which I think is potentially going to be strong resistance, is still below. I hate when I keep doing that, so I just do that. It fixes it. I'll go back to 1 year. There you go. So here's the 50 weekly. I think that will be a concern. What else do I want to show you here? Again, I talked about the VIX. Here's the VIX weekly, which is just 1 day because it was just Monday. All right, if we look at the commodity ETFs, gold eased a bit. Silver continues to running right up into that 50. Oil trying to make a move up off of a recent pullback. Natural gas, not so much, bearish engulfing. And both the 10-year and the 30-year came down. Maybe somebody stopped dumping the U.S. bonds, which is probably a good thing at the end of the day. The buckets show that the markets improved some with less stocks down here in the lower part of the Bollinger Bands. We're starting to see the numbers pick up. How do I know they picked up? Because gray was yesterday, the light color is today. Gray was yesterday, the red is today. So we are seeing less compared to yesterday in the bottom of the bands, and we're starting to pop up more in the top. So we're starting to shift to the right, which is a little bit more bullish. If I look at the market breadth, you could see very different days. The NYSE opened up flat and closed at the high of the session, or just off the high of the session. The NASDAQ gapped up and then closed below the middle of the session. Both of them are positive sessions, both on lower volume. One was closed high and one closed low in the session. If we look down here, you could see that the stocks below, above the 200 in red, 50 in white, and 20 in green are increasing as the markets are rebounding. New high, new lows were still negative on both. The AD lines are positive, as is the up-down volume, so that's an improvement as well. The ratio charts, what is working and what is not working, you can see staples after a pullback on end of last week turned up, as did the defensive utilities, real estate, and healthcare. Discretionary continues to head down. Technology, it didn't have such a good day today. Materials turning up here. Communications have come off the top. So nothing that really tells me a loud story here. Forgot to look at the timing model, but I'll just tell you no change. Here's the weekly. All I look at is this line down here. It still tells me on a weekly perspective, each of my indexes is in a sell. If I look at the daily, the interesting thing on the daily is the bongos, which are one of the two things that have changed on all four. Now, if we can get above the WMA and close there, we'll start to see new buy signals come in. So we're still, according to my thoughts, retracing in a downtrend. And as I've talked about, my expectation is that we're going to have struggle here. We're going to have a struggle here. And let me just call up the spider over on the layout view because I think that'll be easier to show you. Nothing like merging with a SPAC and being up 50% the next day, the wee bull. All right. And I think what you could do on each of these indices is you could come into the high up here and draw down to those highs, the last highs. And I think that to me is the primary resistance I'm concerned about. And then I'm going to be worried about this area here where that 200 just had a death cross from the 50. They're both heading down. But first I've got to get above this descending trend line, and that's the same on all of the index ETFs. If we go into the JAS layout, which is what we are here, the impulse includes all the stocks in the NYSE, the NASDAQ, and the Amex filtered for $1 and 100,000 shares. The top-down view sticks them into sectors, and I can see my bad sectors popped up again. There's a couple of stocks that are weird that have started showing up. Bull is an IPO. It's supposed to be in technology, not tech sectors. It just came out on the investment. There's another bull. So those are just mischaracterized by my data provider. We'll have those fixed by tomorrow. If we look at performance, and this takes all the stocks in my impulse and puts them into sectors, we're going to ignore the two zeros here, and you can see the big movers, and we're producer manufacturer, we're ignoring that one as well. So real estate was up 2%, healthcare was up 1.92, utilities 1.75. I might just come in and say let's take the three sectors that led, and that gives me 946 stocks. I could come over here and do the same thing, and let's take the top 10 industry groups in those sectors. 3, 6, 7, 8, 9, 10. So these 490 stocks represent the stocks in the 10 best industry groups in the 3 best sectors. And then what might do is rank them by, I like 2-day momentum. And let's just go through them and see if anything looks actionable. So the first one is MTD. Wake up. And you can see MTD, and this unfortunately is the pattern we're going to see. Just like the indices, these things have rolled over and now trying to work their way back. This one's going to fill a gap or kind of got close to filling the gap. And you'd expect anything that looks like this to have all kinds of resistance on the way working up. And not my favorite stock. ARGNX, on the other hand, isn't interesting. It's expensive. Big uptrend, pullback, and a breakout here. Down here, you could see it had a blue dot for momentum, 2 in a row, which is one of my favorite signals, a breakout, and big volume. You can see the relative strength crossed above its moving average, OBV crossed above. I like ARGX, but again, it's an expensive stock. The next one down is Beijing, new ticker ONC. I'd like to see it take out that trend line, which I put over the weekend. It looks like it's coming. Um, Pampra Energy, I think this is an Argentinian utility trying to break out. Here's another beaten up stock, IDEX, Regeneron's beaten up. You know, sometime eventually these beaten up stocks will make a move, but I'd rather buy things in an uptrend that pull back rather than something that's beat up. Man, these are some really good names. Vertex is one I love. I don't love the sideways movement here. You could say it broke out of a flag off of this pullback. That might be another one to put on my watch list. Thermo's beat up. And this is one that we talked about over the weekend that I am currently in, SMMT. This is a early stage biotech with a really interesting cancer drug that had some good data announced here, presented live here, and it looks like it's running again. The chairman and CEO used to be at a company that developed a drug called Imbruvica and sold it to AbbVie and J&J and has a great track record, which is partly why I'm in the company. MDGL, no, and I just would go through these stocks to see if anything else looks like it's potentially actionable right now. Again, I don't look for these things that are beat up. I want things that have recovered, giving me a trading signal. Axosome is one that I've liked a lot. You know, it's pulled back to the 200 and had a big move up, but still I'd rather see it move some more. So VKTX was up today. This is one that's been a disappointment to me. I really liked it at 60. I should really like it down here. They're developing an oral GLP-1 inhibitor. Z-Lab is a Chinese biotech. So I think we picked the best of the litter. So top-down investing, find your favorite sectors, and then I like to look at the top industry groups in those sectors and go search there. Another thing to do is just to go in and look at the top industry groups. And these are probably going to be the same: 2, 3, 4, 5, 6, 7, 8, 9, 10. Anything of these look different. Melly, we looked at over the weekend. What a move it had. Breaking out over the 50. I like this one. Expensive stock. And AutoZone went again. Boy, these are some expensive stocks. There's Beijing again. Lilly bumped up because of Pfizer shutting down their GLP-1. Granger. All right, so I think I found the ones I like the best here. So that is what, here's Costco ready to break above its 50. Gotta love that one too. So that to me is top-down investing. One tool has the ability to sift through the top sectors, the top industry groups. Now, I also like bottoms up. So here's the 3,500 stocks, and let's narrow that down by let's look at stocks with volume greater than 500,000, price greater than 5, and I'll bring it down closer to 2,000, 1874. My favorite signal is the 2 days Momo up if I'm bullish. Right now, I think the market may still go a little bit higher. A lot of them today. That tells me it was a strong day. ARGX we already looked at. I like that. BBAR, I like this. This is an Argentinian bank. You could certainly see why I like it. I like flags, and you just had a big breakout today. Another BMA, I believe, is another Argentinian bank. Cracker Barrel, And just to point out, each of these have these two dots in a row here, which are the momentum. So these South American or Argentinian banks, here's another one that looks really good. Um, NTST, yeah. There's something going on with all these stocks at SA, and I think these are Argentinian plays. Is it weird when all these good stocks have the SA after them? So we saw a couple things we like there. ARGX, if you want something expensive, those Argentinian banks look very interesting as well. I'll look at the CPR multi-time frame, which is a trending indicator, and if it's a multi-time frame, it means it's been in a buy on the weekly and just flipped to a buy on the daily. So let's just run through this list real quickly and see if anything else looks actionable. Agilent, AER, no. And again, I don't like buying things that have pulled back this much. That doesn't mean that they're not interesting. Because it's hard to find things that have been in weekly uptrends. All right, so again, this one's interesting because it's pulled back, big run up, pulled back to the 50, had a pretty significant move. Um, Relative strength and OBV are not there yet. I'm looking for breaks above their moving averages in yellow. But the reason why this is making the scan is if you look at the daily, you see that blue dot here, that's the CPR. And if I look at the weekly, it's also in a weekly CPR because it requires both for this to fire. IPO, EPAM. So far, I don't think I see anything I like as much as ARGX from the last scan. Now, normally we see a lot more here, but after the market has fallen off, and I do want to, yeah, I don't like that one. Just looking, you have, the way I look at it, I got thousands to pick from. If I don't find one that's perfect, I don't buy something. And just going through, none of these look great. This is what happens after the market has sold off so much. And then I'm just going to leave you with, we looked at three stocks um, at the end of my analysis last night or over the weekend. I just want to go back and revisit those three stocks, and then I'm going to say goodbye. We got to find my notes because that's where they are, and I only remember two of them. And if I don't find, there's my notes. So we looked at um, ADC. This is a REIT, so I bet it was up nicely. It was up nicely. Um, why did I pick it? Uptrend, pullback, breakout, pullback, and I like to take it out to 50 here. All right, that was one. Palantir. This is not one that I have to be a genius to find. This is a very popular stock. Had some news and it broke out. Now it came down like most of the market and pulled back some, but still a nice up day with a big gap. And then WGS is probably what I had the least confidence in. And let's see what it did. Also had a nice breakout. Again, nice uptrend, pulled back, took out the 50, and had a nice move. And then the other one that kind of looks interesting to me here is MicroStrategy. This is one way to play Bitcoin. They have some leverage, and I wanted to see them break out. They broke above the 50. That was one of the things I was looking for. This one's probably not without risk, and we're about to take out that trend line. Then you could have also put, I think, a trend line in here. If you skip that one and maybe go to this one here and take that down. I thought that one also. So this is kind of an interesting stock if it breaks out. So there you go, 24 minutes. Boy, that was too long. What do I think is going to happen? I think we're going to struggle here, go sideways, but we still might break out and go higher. That's why I looked at some longs. Be careful. We'll see you tomorrow.